Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan. He's a co-founder of LikeFolio. Landon, welcome back to the show.
Thanks. Great to be here.
All right. LikeFolio gave us some data on DoorDash just over a month ago, Landon. The stock's up nearly 15% just this year, up over 61% from year-ago levels. I mean, are you guys still seeing positive data out of here? Because I look at inflationary pressures, and this would be one of the first things to get rid of, but now it seems to be locked into our economy at this point.
Yeah, it's kind of, it's the leader in this space by far. I mean, it's the leader in last mile delivery for things. I mean, it's starting to move beyond just food, and it's, just like I said, the thing delivery of the last mile. And last quarter, they had a great, they had a really strong report. I mean, they finally turned a profit, 38 cents per share. Their orders were up 18%, total order volume up 19%, margins moved up 2%. They're adding a lot more stores, a lot more merchants out there, including the Home Depot. So this kind of, transforms your idea of what DoorDash is. It's not just, I'm hungry, get me some food. It's, hey, I need something. Can you go pick it up for me? And you're starting getting into B2B use cases, right? I mean, you can imagine all kinds of situations where, a worker needs something from Home Depot, and you got to choose between driving there and picking it up and coming back, or just paying somebody to get it for you. So they're doing a great job, I think, leading the space. And when it comes to mind share, they're it. I mean, when you look at total web visits among them and all their competitors, they have about a 45% share of that. So they are the dominant player when it comes to that last mile delivery. And they've done a lot of good things recently. And you can see that here, that mind share. So they're almost at 50%. Shipped is coming on. It's only 2.5%. They're the one that's growing the fastest, but it's really small. So I'd still focus on the fact that they are the leader here. They've done a lot of updates to the platform. I mean, now you can search for items across multiple merchants. So you're searching for the item itself instead of going to the merchant and saying, okay, now what do I want from that merchant? It's what item do I want from the world? You can order from multiple stores in one order. You can even import your grocery list. So you can just say, hey, this is everything I need, bring it to me. So they're doing a lot of really strong things. They've got a very high customer service rating, customer happiness rating. Their monthly app users are up about 13% on a year-over-year basis. And that was kind of in a stalling pattern there for a while. That chart was kind of iffy, but it's moved up significantly over the last little bit, along with the stock. So I think that they're really doing a lot of things well. And as you mentioned, the stock is showing it. I mean, here you can see the monthly active users, wrong direction for quite some time. They've snapped that downtrend and are now moving in the right direction, up 13% on a year-over-year basis. So they are the leader in a space that I agree, if things are tight, you're going to go pick it up yourself, right? That's going to be one of the things that you cut out on. But it's a kind of a bet on the economy, is a bet on DoorDash. So if you had to pick one of these companies, I think they're the ones. I mean, Uber I can make a pretty strong argument for as well, but DoorDash is definitely the leader in this space. And their stock is, nearly doubled since the July lows. So it's very strong, just off the highs here heading into earnings. But overall, very strong company, leader in the space, and doing a lot of things right that not just make their customers happy, but empower them to spend more money on the platform, which obviously is a good thing.
Landon, this company went from a COVID winner to a cash-burning startup, and now they're a cash flow and revenue machine. And, what do we take from Uber's chart in the last week or so? Are they a comp to Uber right now? Can we actually connect the dots between DoorDash and Uber? Is that the way to look at a company like this? You're moving things from point A to point B. Groceries seem to be their next horizon, and then there's several after that. And Landon, I think Tom's wrong. I'm not sure you would cut this right away from your budget. I think it's getting ingrained in the budget for getting things delivered, especially if you're elderly or you live in a city or in an urban area where things get delivered more. I think slowly but surely this is becoming just part of normal day in the U.S., Landon. And oh, by the way, not only U.S., Europe, Japan, Australia. Landon, your thoughts?
Yeah. Yeah, they're expanding, and I think it's tough. I think you make a case depending on where you live, what your lifestyle is like, if how critical a service like this would be. I think probably the more urban areas, you're going to have this as more of a necessity, whereas in the more rural areas, you're going to say, I go pick that up myself. It costs a little bit too much. But as long as we keep going on and time keeps going on and people aren't cutting it, the longer that happens, the more it is getting more and more ingrained, because it's once you go beyond, hey, I want a burrito, and you get into, hey, I need my groceries delivered, or hey, I need some of this stuff for the work site delivered. You're getting into stronger use cases that make a little bit more sense. I mean, the one-offs, just I'm hungry kind of use cases, I think that might be the first to go. But they're adding so many different things that now it's just convenience, and at some point you have to ask yourself, what do I pay for my time? And if it's saving you enough time that beats your hourly rate, then you use it. So it really just depends on how each individual, how they're going to make those decisions. The stronger the economy, the stronger this company for sure. And then the longer that we continue to go where people aren't cutting it, the more ingrained it becomes. But they're doing a great job of expanding what they offer. They've got new partnerships. Trade Desk is another one that they're getting in there with that's going to help their advertising side. They're making a lot of smart moves that just make their platform better and better for the user, and people will continue to use it. So I think it's tough where they're at right now at $192. I'm not bearish here, but I'm just saying that, they're getting in that's priced right kind of area, right? It feels like they're in the range where they should be. So our score going into this one is plus 18. Kind of on the neutral side. Any kind of sell-off here on earnings, on strong earnings, any kind of unwarranted sell-off would be a buying opportunity. But trading into this one, I think that, I'd lean bullish. I wouldn't go heavy on, I wouldn't go all in, but I'd lean bullish on this one just because of how well they've been executing. And I do like that, they've sold off slightly since the high. They almost hit 200, and now they're down to 192. So small sell-off, but overall, a very strong company. All the metrics that we have look solid on them, not blockbuster, but solid, and they all warrant or justify the stock price where it's at.
Yeah, I think you guys had that same mentality yesterday on Shopify. It did pull back, but they scooped it up also on the pullback that we saw this morning. All right, great stuff, great data as always, Landon. Appreciate it.
Thank you. Take
All
care.
right, that's Landon Swan, co-founder of LikeFolio. Kevin, that RSI on it getting